All right, everybody, welcome back. We are officially in week 3. Um, let's just jump right into it. All right, share my screen. All right, y'all, here we go. Again, we're gonna speak on candles, right? Data centers of the market. I'm gonna keep saying it over and over. One of the most important things to pay attention to are the candles. They tell you exactly what's happening in the market. All right. So, as always, the disclaimer. So, I am not a financial advisor. Anything we cover today is not financial advice. We are only discussing the tools that I use that influence my decisions. You are highly encouraged to do your own research before making any financial decisions. Also, we appreciate you giving us the opportunity to add value to you, to help you, and to accelerate your trading experience. Okay? So, just a quick recap on what we spoke about last week. So we spoke on chart patterns, all right? So one of the patterns we spoke on was the double top, right? We had top 1, which formed when we have a significant uptrend, followed by consolidation to the downside, all right? Then followed by another uptrend, followed by a deep, steep decline, all right? Next, we talked about the double bottom, which is the complete opposite of the double top, with the neckline being, sorry, that's my alerts going off, with the neckline being in this area here, which would be at the top of both of the bottoms, again, which is the complete opposite of the double top, with the neckline being on the bottom of the 2 top points, all right? The area where it is suggested to set your stop losses is right below the neckline to validate whether or not the trend is going to indeed be true, all right? And again, when you're using these indicators, the target is already preset for you, so you do not have to set those target levels, okay? Next, we have the head and shoulders, all right? An upcline followed by a decline, followed by a steep uptrend, followed by an additional decline, and another uptrend, followed by a steep decline. All right, again, with the target already set, with your entry right below or right above the neckline, as well as that would be the area where you would put your stop loss, right? And again, stop losses are extremely important, especially when you're looking to play these chart patterns, okay? Next, we talked about the rising wedge, an uptrend, followed by a downtrend, followed by an uptrend, followed by a downtrend. And again, with your target already preset, and your entry level would be just above this area here, along with your stop loss, all right? And then the falling wedge would be the complete opposite, all right? A decline, uptrend, downward trend, followed by an upward trend to your specific target. Now, of course, as you can see here at the bottom, we have the names of the indicators for you, all right? And when you are choosing these indicators, please make sure you make them your favorite, so this way they're easily to locate, all right? Next, we talked about the bearish flag chart pattern, all right? It's a decline, followed by an uptrend, followed by a decline, followed by an uptrend, followed by a steep decline. and again, with your target already set for you, and putting your stop losses right where the official trend begins. All right. And as you can see in this diagram, the trend did not flow in the direction of the target, which is why your stop losses are important. Okay. So then we have the bullish flag, the complete opposite of the bearish flag. All right. Then we talked about the cup and handle chart pattern. All right. Starting here, we have a downward trend with a U shape. All right. Followed by an upward trend, followed by what should be a immediate decline, and then an upward trend. But as you can see in this diagram, it did not become a true trend. All right. So again, and I'm going to keep stressing it, stop losses, stop losses, stop losses. All right. Now followed by the bullish pennant. Okay. And then also the bearish pennant. All right. We also talked about the triangle chart pattern. All right. A steep upward, followed by a steep downward, a brief upward, then a downward, and then a steep upward momentum, again with the target already preset. Then we have another triangle chart pattern, right? So this one is the bullish. Excuse me. This is the bullish one, and then this is the bearish. Okay. Followed by the all charts pattern. Now, to remember, the great thing about using the all charts pattern, and it is already set up all of the patterns that we spoke about and then some, right? And then you can just simply go into the settings of the all chart patterns and unselect the ones you are not going to use. So this way you don't have all these patterns causing havoc on your chart. All right. Next, what I want to talk about, let me stop sharing because now we are going to talk about the SMA and the EMA and what the difference is and what they actually mean, because you hear it all the time, EMAs, SMAs, EMAs, SMAs. So now I want everybody to understand exactly what they are. Okay. Oh, I should have stopped presenting. I was still showing us. Oh, my apologies. So we also talked about, sorry guys. We also talked about the support and resistance, right? The chessboard support and resistance, which is the indicator that Mark created. All right. Then we're going to dig a little bit deeper after I talk about the SMAs. All right. Here we go. All right, so the SMA versus the EMA and what you need to know, okay? So what is an SMA or an EMA, right? First, we have to understand what a moving average is, and that's exactly what SMA and EMA are, all right? So a moving average is a way of smoothing out fluctuating data over time to help identify trends, okay? So imagine, so let me back up a little bit, because as I mentioned in the past, I am a huge fan of the KISS method. And again, what that means is keep it simple, stupid. And of course, that isn't to insult anyone's intellectual levels, right? It's just a different way of understanding things, right? When you break things down to its finest level, whereas it's that much more digestible, all right? So that is one of the teaching methods that I use to help get the message across because it is how I understand things, okay? So now imagine you are counting the number of cookies you eat every day. If you want to know the average number of cookies you eat over the past 5 days, you simply add up how many cookies you ate each day and then divide that by 5. All right. Now, in this example, it's just using if you're looking to find out the average of the past 5 days. Okay. So, an SMA. What is an SMA? So, a simple moving average is a way to find the average of a set of data over a specific period. So, what is an EMA? An EMA is a type of moving average that gives you more weight or importance to recent data, to recent price data than older price data. All right. So both the SMA and EMA are types of moving averages used to smooth out price data over a specific period. They help traders to spot trends in the market, but they work slightly different. Okay. So the SMA breakdown. So a simple moving average is a way to find the average of a set of data over a specified period, a specific period. So for an example, if you're looking at a 5-day SMA, you would add up the closing prices of stock for the last 5 days, then divide that number by 5. So how is this calculated? So to calculate the 5 PM day for stock with the following closing prices over the last 5 days. So for day 1, you have $10. Day 2, you have $12. Day 3, 14. Day 4, 13. Day 5, 15. So you simply add them all up, you get 64, and then you divide that by 5, or the number of days you are looking to collect this data. All right, so the 64 divided by 5 gives you 1280. So the 5-day SMA for that stock would be 1280. So why is this useful? The SMA helps smooth out short-term fluctuations and make it easier to spot trends in stock price over time. It gives a clearer picture of how the stock is performing on average over the time period you are looking at. All right. So now let's break down the EMA. So an EMA is a type of moving average that gives more weight or importance to recent data than older price data. All right. This makes the EMA more sensitive to recent price changes compared to the simple moving average, which treats all prices equally. All right. So how is it calculated? The calculation of the EMA starts like the simple moving average, but it puts more emphasis on the most recent prices. Okay. So instead of it collecting the data over time, over the last 5 days, it's collecting the more recent data. Okay. So the more recent data, the more it affects the average. So the formula involves smoothing out constant, which is a factor that determines how much weight to apply the most recent prices. So the previous EMA value and the current price. So now imagine you have a bowl of fruit. Every day you add a new piece of fruit, which equates to the latest price. And that bowl represents the average of all the fruit you've added so far. But the EMA is like giving more importance to the fruit you just added today than the fruit that has already been in the bowl for a while. So even though the fruit that has been there for a while is still a part of the bowl, the newest fruit you added has a bigger influence on how the bowl looks today. So, for example, if you're looking at a 12-day EMA, you're only using the last 12 days of data to calculate the average, but the most recent day will count more than the previous ones. So if you're looking at the 50-day EMA, the calculation will be based on the last 50 days with more weight on most recent days. Okay. So the key differences between the EMA and the SMA. So sensitivity to recent data. The EMA gives you more weight to recent prices, so it reacts faster to changes in price. SMA, it treats all of the data points the same, so it reacts slower to price changes. So the speed, EMA is faster to react to price changes, making it more responsive. SMA is slower because it treats older data the same as newer data. Okay. When following the trend, the EMA is better for short-term trend following since it reacts quickly. SMA is better for long-term trends as it smooths out the data more evenly. So which one do you use? So an EMA is generally used when you want to see more immediate trends and are looking for signals that respond quickly to price changes. SMA is often used to see longer term trends and can help filter out short-term fluctuations. All right, so in simple terms, SMA is like looking at the average of all the prices over the period and treating each price the same. EMA is like looking at the average, but giving more importance to the most recent prices to help you react faster. Okay, so if you're driving a car, this is the example I'm going to use. If you are driving a car, which is the stock price, the SMA is like checking the road every few miles to see how smooth the ride is, while the EMA is like focusing on the immediate road in front of you to react quicker to bumps and turns. Okay. So, conclusion, if you are looking for a long-term trend and prefer a smoother, less volatile line, SMA might be the better option. If you want to be more responsive to recent market changes and focus on short-term trends, the EMA could provide more timely signals. In both cases, these moving averages are invaluable tools for helping traders and investors identify trends, confirm signals, and filter out noise in the market. The choice between EMA and SMA depend on your time frame, trading style, and how much sensitivity you want to market, how much sensitivity you want to market changes. Okay, both EMA and SMA are important tools used in technical analysis to identify trends in market, smooth out price data, and help traders make more informed decisions. However, each has its own strengths and is suited for different purposes depending on the trading strategy and time frame. Okay. So do we have any questions in regards to the SMA or the EMA? Stop sharing.
I'll say something or ask for just for clarification. I noticed the EMAs are used more frequently than the SMAs because it's more like you
Can you
said,
speak up a little
like
bit so I can barely hear you?
oh, you can barely hear me.
Yeah,
Can you hear me now?
there we go, there we go.
Okay, yeah. So the EMAs I see are used more frequently than the SMAs because it's of more current data.
Right.
Correct. So do people even use SMAs?
Well, I have used them in the past before I really started digging into becoming a day trader. Right? Because again, the SMA is used for long-term trade. So let's say, for example, if I'm looking for elite, then I'm going to focus more on the SMA because it's giving me more long-term data versus using the EMA, which is giving me the same type of data, but it's really focusing on the current price versus the prices overall.
Okay. So would you say EMA would be like for day trade and SMA would be for leaks and further out?
Right.
Okay, because I always looked at the EMA. Okay, that's good to know. Thank you.
Any other questions, guys? Before we really start digging deep into the market? All right, we're gonna move on. All right, now let's look at what everybody else is looking at right now. All right, so let's look at the market. Now, I really want your participation on this. I know everybody's focused on the market. I understand, but this is the part I really need you guys to understand. All right. Because now I'm going to show you exactly how I do what I do. You are going to witness exactly how I played SPY early. All right, can everybody see my screen? Give me a thumbs up.
Yes.
Yep.
All right, perfect. So here we go. I should have left it yellow so you guys could have seen exactly what happened. All right, so when SPY first opened, so first I'm looking at the 5-minute time frame. This is the time frame that I really, really enjoy using because it slows down a lot of the data. Right now, of course, the further up, the slower the data is going to be. The lower I go, the that much more quicker the data is going to be. Excuse me. I used to trade on the 15-second until I realized it's just moving way too fast, right? I know that just is kind of speaks for itself, but nonetheless, as a day trader, you want to make sure you have as much data as quickly as possible so you can react that much quicker, right? So when SPY opened, let's see, 9:30, SPY opened right here, all right? I got into SPY in this area right here, right? I set my first level right here, all right? Then I set my second level probably somewhere around here. And then my third level was set here with my exit set here, right? Now it didn't hit my target exit, which was fine, but it did indeed hit my other levels. Now, how did I know that? So now we're going to fast forward and we're going to look at what's now happening with SPY. So looking at support and resistance, right? Extremely, extremely important. If you don't use any other indicator in the market, I highly advise you looking at support and resistance. Why? Because it gives you not only current levels of where those candles may potentially move to, it also shows you where they came from, right? So for example, this level right here, I'm gonna set it, right? 54, I'm sorry, not 54, 525.41, right? And then we have another level of support at 521.62. Now, matter of fact, let me use this one so it's easier to see. All right. Yeah. All right. So we have the bottom of support, right? And then we have the bottom of resistance, and then we have the top of support. Okay. Now we just boxed in that candle, right? So looking at where the candle came from, right? So we're noticing an upward momentum. So you know what? We're just going to start with this candle here, right? You know what? Let's go to a lower time frame. So this way we can really see. Because if we wait 5 minutes, and the whole presentation will take too long. All right, so we are now looking at, 15 seconds. We are now looking at the 15 second, right? Now we're going to really see quick price movements, right? Let's delete this. All right, so we have this level right here. So you see how quickly it's moving? It's like I'm chasing the bottom of resistance right now. All right, that's the bottom of resistance. Now we have the top of support. All right, so looking at this candle, depending on the direction it's going to go, right? Right now, it looks like it wants to consolidate because it's just simply bouncing between these two levels, right? If it hits the bottom of resistance and goes through it, then I can clearly set a next level, right? So let's say right here, if it falls through the top of support, then I'm going to set a next level right here. Let's say in the middle for using the middle as an example, right? And then I'll get more in detail on how to set these levels specifically based on the candles and the wicks. All right. So what happened? It got to this level of 53.48 and it rejected, right? And then it went up to attempt to hit this level of 524.21. What I know and what I've realized over time from watching these candles is that if it bounces off support, it is going to fight to get to resistance. Okay? As we just saw here, it bounced here and it went right through that level, the bottom level of resistance. All right. So what happened? It rejected. So now it is going to fight to touch this level right here of 523.48. Now, two things are going to happen. It's either going to bounce off of 523.48 or it's going to run right through it, right? If it runs right through it, then another level of support is going to be created, just like another level of resistance is going to be created. So literally, support and resistance, you have your support, your resistance at the top, you have your support at the bottom. The candles are going to spend all day bouncing between support and resistance. If it breaks the bottom of resistance, then it is going to run. If it breaks the top of support, then it is going to run. Now, when I say it's going to run, it is now going to run to a new level of support or resistance. Now, as you can see here, right, I set that new alert. And what happened? Because it originally broke that 524.21, and I had set that additional alert at, I can't remember what it was, 524.60. It hit that level and rejected, right? So now what's going to happen is, and I'm going to send an alert right here, it is going to fight. Well, it bounced off of that level right here at 524.21, right? So now one or two things are going to happen. It's going to come back down and bounce off that level again, or it is now going to bounce. It's going to go right back up and create a whole new level, right? So what happened? It rejected and it went through that level, right? So now it is going to fight to get to 523.48. Now let's watch this unfold. And if it goes through 523.48, it is going to touch 522.85. If it goes through it. Now let's watch and see what happens. I see your hand, Pig. I'm sorry, Vidal. I'm gonna get to you. Now, if you notice here, right, you see what this wick is? That is another, it can potentially become a key level, right? Because it came down here at 523.85 and it rejected. So now what's happening? It is consolidating. And how do I know this? Consolidations zone live. I believe we spoke about this indicator. If we have not, please let me know and I'll go more in detail with this indicator, okay? This is another indicator I highly recommend you using because it removes a lot of the guesswork on whether or not ticker is consolidating, right? Once you see these two lines here, that means that it's going to start to consolidate. And once you see the highlighted area, it is officially consolidated, okay? So, go ahead, Vidal, what's your question?
When you're using that chessboard support and resistance, are you marking off those levels on a different time frame than coming into like a lower time frame to kind of watch it move around in that range, or are you using all that on the same time frame?
I'm doing it all on the same time frame.
Okay.
What I believe everyone should do, get comfortable with being uncomfortable with your time frames, if that makes sense, right? My comfort zone is 5 minutes. I do all of my charting on the 5 minute chart as a day trader, right? Because again, all of the data has slowed down just enough for me to be able to react to it in real time. Now, if I was using the 15-second, as you already saw, it moves relatively quickly. It's not giving me enough time to chart my levels. Now, I did trade on it for a long time and I was able to chart my levels, but what I realized, I was just really giving myself anxiety, right? I needed to be relaxed, calm, and be able to really look at the candles like I know how I should be looking at them. Looking at something at such a smaller time frame, it moves too quick, right? So now we're on the 5 minute, right? So now everything is a little bit or a lot more slower. So now I can really start to plot specific levels. All right. So now I'm going to start to plot. All right. So we have right here, and then we have this level of the top of support right here. So based on the trend, right, it is going to trend upward to 525.61, right? Two things are going to happen, and this is always true. It's either going to bounce off of it or it's going to go right through it. So it's going to reject it or go through it, okay? So as you can see, what's happening with the candle, it's just spinning right now, right? It's going up and down, right? So while it's going up and down, now I'm going to start to look at the overall picture of what's happening with the chart. All right, let's take this off. All right, so now I'm going to start plotting out the rest of my levels, okay? So now what I'm doing is I'm looking at the wicks, all right? Which wicks line up, okay? I see these two wicks right here, they line up. So guess what I'm gonna do? I'm gonna make that another level. Now the reason why I chose that, because this specific candle reached this area and rejected, went up. Came back down, rejected, and went up. So in my mind, that is a key level of support, all right? If it breaks through this level, I know what's gonna happen, right? So let's look at some other candles, because remember, as I explained earlier, you can now start to look at the candles, the present and the past, all right? So let's go back a few candles, okay? Another key area for me, right? It bounced here, it bounced here, and it bounced here, all at around the same level, right? So that's gonna be another level of support for me, okay? Boom. And then now I'm just simply looking at where is the bottom of support. And there we have it, it's right there. So that's going to be another level for me, okay? Now, because this indicator has all true, average true range baked in, that's why you constantly see that movement, right? And I know Mark spoke about this last week, but that's why we're constantly seeing that consistent moving of the support and resistance. Had the average true range not been baked in this indicator, then we would just see it relatively sit in this area until my guess is it just changes on its own. All right, so look at what's happening here. Another level. So that is now going to become a key level of resistance for me, because for whatever reason, the candle wicked right here, 525.02 twice, right? So let's sell an alert there. Because now what that's telling me, that if it breaks this, it's going here, without a doubt. Without a doubt. Without even me thinking, my alert is set, because I know it is, once it breaks here, it's going here, okay? So remember, we have this alert here, right? Because this was the top of support, right? So it broke that. Now guess where it's going? Right here, 522.12. Well, actually, it may have rejected. All right, so let's set it back. Now let's see what happens. Now, keep in mind, well, you know what, I'm not even gonna, because I don't want to dig too deep in that, because I'm just going to speak more in detail on what causes SPY to move, and I don't want to start confusing anybody. Alicia, yes, please.
I saw how you got to the support lines, but the bottom support line, I don't see how did you get that one, the bottom of the support line up?
All right, so this is the top of support. That's
Right.
right there. So let's make that yellow. All right, so this is the bottom.
Right. So I saw how I understood
Go ahead, I'm listening.
the top, but I didn't see what you lined up to get to the bottom. Like it wasn't really the top of anything like the other ones were.
So now I'm not looking at the candles in regards to the top of support and the bottom of support, or the top
Oh,
bottom.
okay.
I'm just simply looking at where the indicator has literally the top and the bottom.
Oh, you're just looking at the indicator. Okay. All right. Thank you.
Because that, again, that level is set because of all true range. All true range definitely is a significant player when it comes to the candles, because and forgive me if I don't say this correctly, but it's really giving you the average of where the candles are moving, right? And Marx speaks to this a lot much more than I can, because he has a better understanding of it than I do, because it's not something that I look at. All right. Now, I know right now my chart looks crazy because you see all of these lines. But again, when it's still and you start plotting out these levels, it all makes sense, right? So now what we just simply have to do is simply sit back, be patient, and allow for the market to do its thing, right? So again, we have the bottom of support, we have the top of support, we have the bottom of resistance, and we have the top of resistance right here, right? Now, guess what? It just broke resistance again, right? That bottom of resistance now is almost at that key level right here, 525.01. And as I mentioned earlier, if it breaks 525.01, it is automatically going to 525.61. Oh, good fella. I'm sorry. My apologies. I didn't see your hand. What's up?
Yeah, real quick, which indicators and overlays are you currently using? These are a little different from the ones we saw like a week or two ago. Just trying to get
All right. So this specific one here, it is the slingshot, right? Now I'm not going to get in detail because, again, I don't want to overwhelm you guys with this information. So if you want to use this information, I'm just going to show it to you. I'm not going to explain it to you, right?
Yeah, that's cool.
All right. Only because you asked. All right. So that's the slingshot. All right. And then I have my EMAs. Oh, no, that's the. So my EMAs are set at 10, 20, 50, and 200, 100.
Yeah, I'm good with the EMA.
Oh, that's the volume. And then this one is the SARS. Parabolic SARS. Okay. And that's it. And then this one up here is the Bulls versus Bears. They're just simply letting me know who's in charge.
How do you get the zones, the red and the green zones, with and the
That's the
little
support.
arrows?
The support, the chessboard support and resistance. This is the indicator that was created by Mark. This is the one I went over in detail last week.
The chessboard?
Right. So now look here. You see it went to this level and it rejected at the top, right? All right, so now it broke through that alert, right? But it rejected. Now let's see if it continues that downward momentum. Because what needs to happen, it needs to break this level, 522.12, for me to even think about seeing it going to 519.96. And this is literally how I'm in and out of the market so quickly. Now, believe it or not, these same rules or the same information I'm explaining to you now can be used on higher time frames like the daily, the weekly, the 3-day, the monthly, the quarterly, right? If you're looking to play those long-term plays, you can take the same information and apply it. And that's what I like about it, because the information is universal, right? You can use it on any time frame. All right, so while this plays out, let's look at the daily, right? Let's use another ticker. Somebody give me a ticker.
NVIDIA just played a video.
Nvidia.
Yeah, all right. Let's look at NVIDIA. All right, we're looking at NVIDIA on the daily, okay? And I'm gonna use the same information that I just did with SPY on the lower time frame, right? So if I was looking to play NVIDIA for the next couple weeks, right? NVIDIA is currently right here, right? Let's put a yellow line for the current price. Okay, I might actually make that green. Oh. Okay, so NVIDIA is currently at, all right? So here is my bottom of resistance, right? Let's make send an alert. 109.20, and here is my top of support, 99.24. Okay. Here is my top of resistance, 122.98. Here is the bottom of support, 85.53. All right. So I just created two boxes, right? In between support, in between resistance and in between support. Okay. Let's blow this up a little bit so we can see it better. All right. So, which way is NVIDIA trending right now? It is trending upward. So right now, it is fighting to hit this level right here, 109.20. Right? Now, for whatever reason, if NVIDIA rejects 109.20, it is going to fight to get to 99.24. Okay? So now let's look a little deeper. What candles can I use to measure, or what information can I look at to measure my next level of support? Okay, so NVIDIA consolidated in this area right here. So guess what? That is going to be my next level to the upside, 114.50, okay? The top of consolidation was right here at 122.40, okay? So now, guess what I've done? I've just now created 4 levels in my resistance area for the daily, okay? So now let's do the same for the support area, all right? Now let's look and see where NVIDIA has struggled to fall. All right, let's see. Now let's look back in time. We found it right here. Okay. So now we got another level right there. 95.77. Okay. Once it broke to the once it broke to the downside, was there another level NVIDIA struggled at? Yes, right here. Let's blow it up. Another area where it consolidated, right? So now I'm going to use the bottom of that consolidation as another level. All right, 88.22. Okay, so now I just created 4 levels for these 2 levels right here. They're old, so disregard those. Okay. All right, so now I have set up 4 levels if NVIDIA breaks resistance, and I have 4 levels set up if NVIDIA breaks support. Done. Right? Now, because all of these alerts are set, I don't have to pay attention to a video. Now I can move on to the next ticker, if that's what my plan is to do. Now, me personally, I usually trade 1 to 2, maybe even 4, depending on how well the day is going. How well the day is going, I may play anywhere between 1 to 4 tickers, but I usually just play 1 or 2, right? Because it's now I'm really dealing with too much. And again, as I said in the past, I'm a relatively simple guy. I just don't like being all over the place. Okay. So again, now my chart is set, but when it comes to the daily, so let's say now I'm gonna watch to see how NVIDIA performs, right? Now looking at where she came from, right? She started at the bottom, right? Now we're here, right? So it's clear to me that she is trending upward. Okay, now I gotta really step back from the chart. Now I gotta put my ear to the streets. Okay, what's happening in the world of NVIDIA, right? Is it tariffs? Is it acquisitions? Is it revenue? Market cap? Right? What are the positive things, if I'm thinking about getting into a call, what are the positive things that are impacting NVIDIA? Right? So what's impacting NVIDIA positively today? Well, the orange guy is having talks with the other guy saying, okay, we may come to an agreement. So now the market is like, yeah, let's get in, which is doing what? Pushing the price up. Okay. Now, if for whatever reason, when the orange guy and the other guy finish talking and they haven't come to a solid decision, guess what's going to happen with NVIDIA? It is going to fall, right? And if it falls, right, now, because I'm paying attention to what's happening on the outside, okay? Now I'm looking, where did NVIDIA stop from its last candle? Okay, it stopped right here. All right, so guess what I'm doing? Now I'm putting another level. Setting another alert, right? If it falls below this level right here, because this is the top of the previous wick, if it falls here, it's going here. Without even thinking. If it falls below 101.83, it is going to hit 99.24. How do you know this, Neil? Well, because this is just what happens, right? And that's literally the best way to put it, right? Because it's all about that momentum, right? It's not gonna. Now, let me back it up a little, because it can hit this level and reject. But again, what's happening in the streets? What happened when it hit 101.83? Did they go back to the table to have more talks? Because now, if they went back to the table to have more talks, that's positive, right? So now what's going to happen is going to hit 101.83 and reject and start that upward momentum again, right? But now, keep in mind, I'm not in anything until I see what's going to happen, whether it's positive or negative, with NVIDIA. All right. And so this is why it's important to make sure you keep your ears to the streets and look at your chart before you start jumping in plays. Now, of course, if you see an opportunity and you want to catch that trend and it works, amazing. Take the gains and go. Don't even play. All right. You are in it for a short time, not a long time. Take your gains and get out of there. All right. Do not let the fact that, okay, yeah, it's going to continue to fall be the reason why you stay in the play, because you've now let greed set in and you're trying to take as much out of the market as you can. This is how traders get caught up, right? You're already up, and I'm going to mess with you, Alicia. You're already up 400%. Why do you need 500? Why do you need 600, right? So you got to be mindful of that, because the market takers, they are watching you with their algorithms, right? Okay, I see what you're doing. You want to be greedy? Give me that. So now instead of you walking away with 400%, now you're walking away with 300, 200. And then guess what's happening in your mind? And I'm literally playing this out in real time, because this is exactly what happens to people. When you start to see it, that 300 go to 200, that 200 go to 100, instead of your mind being triggered saying, I'm out, I'm taking my money, you're telling yourself, oh, it's going to go back. It's going to go back to those levels. And now guess what happened? Now you're negative 100. And now you're really telling yourself, oh, it has to go back. And then now at some point, you're going to sit there and say, okay, there's no way I'm going to sit here and let the market take all my money. I just can't do it. And then now you get out. This is why mindset is important. It's no way in the world you should let yourself get to that level and then decide to get out at this level, right? And I promise you, I'm not making fun of you, Alicia. I promise you. I was just using that as an example, okay? But again,
okay, yeah, because I got out.
oh, no,
So
I figured that out. Yeah, I figured that. But so again, so now what did I say? So guess what just happened? SPY is coming back down. So let's go back to SPY real quick, because I just got an alert. All right, go back to the 5 minute. Now, mind you, like I said, I'm not looking at it because my alerts are set, right? Now, what did I say? If SPY breaks that level, it had to touch here, that 521.90, and that's what it did, right? It hit that 521.90, and it looked like it's maybe gonna reject. But because I see this right here, this green line, that's telling me that it may consolidate. Maybe, just maybe, right? Now, looking at where this support level is, guess what? I'm going to set another alert, right? Because now I know if it falls through what this could be a potential consolidation, it is coming right here, 520.89. And if it breaks 520.89, guess where it's going? 519.96, right? It broke it. Now guess where it's going? Before we truly start to see upward momentum on SPY, it is going to have to touch 520.89. Now we're about to see it, considering this is the 5 minute candle, we're going to see a new candle in about 3 seconds. All right, so there we go. Now keep in mind, it's consolidated right now, right? Because we now see it broke out of consolidation and it did it to the downside. So now we are going to see 520.89. We're not even thinking. I don't care what's happening in the world. SPY is going to hit 520.89. And how do I know this? It's because the candles spend all day bouncing in between support and resistance. Before it goes back up to resistance, it has to touch a certain level of support, right? Before it touches a specific level of support, it first has to hit a specific level of resistance, right? So literally, ceiling, the floor, it has to touch one before the other, right? And I know you guys are probably thinking there's no way that SPY is going to hit 520.89. It's not going to happen. I may not hit it right away. Keep in mind, we're on the 5 minute, but it is going to hit it before it hits this level right here. Because now we have another level of resistance. So let's set an alert at 523.37. So before it hits 523.37, it is going to hit 520.89. What's up, good fella?
Hey, quick question. Sorry to ask you this question again. Why did you stop trading on the 15-second? Sorry, I got some work going on in my house and I'm in and out, so I missed that.
It moved too quickly. It started giving me anxiety.
Oh,
And
okay.
I realized I needed to be able to, my thoughts needed to keep up with the price, right? My reactions needed to be able to keep up with the price movement. Because now, especially because I really started really listening to what's happening on the outside. And not that I wasn't listening to it before, I understand because I keep saying it over and over, today's market is not yesterday's market. It is imperative I listen to what's happening in the streets, right? There we go, 520.89. There we go, folks. Right? I know you guys probably thought I was crazy, but ask me how I'm feeling today. I am feeling data driven. Why? Because my emotions are nowhere near the market. I'm letting the chart tell me what I need to hear. I'm not saying I guess it's going to go to 520.89 or I think it's going to go to 520.89. I know it's going to go to 520.89. I'm extremely confident that it's going to touch 520.89. Why? Because it tells me on the chart. There's no second guessing. There's none of that, right? And I told y'all we was going to cook today. I was not playing because I really want you guys to stop giving the market your money. Now, of course, there's going to be some days where it happens. It catches us all, right? But when I look at my success rate, it's anywhere between 75 to 85% of the plays that I make, I take gains. And the reason why is because I let the chart tell me what to do, not me telling the chart what to do or how I feel or what I believe or what I think, right? And the days that I misplace funds, it's just simply me just trading, probably trading on days I shouldn't be trading. Right? So now look what we have here. All right, so we have this level right here. See how the wicks line up? Guess what? It's still going. So now it has to hit 519.96. How simple is this, guys? It literally don't get, it doesn't get any more simple than this. So stop playing with me, Spy, and just go ahead and just hit that 519.96. Stop playing. This is what it is, y'all. I'm telling y'all, this is, once you really understand this part, the mental part, what they gonna tell you? What they gonna tell you? And this is why patience is important. Set your alerts and move on. There's no way you should be sitting here staring at a chart 4 hours, 5 hours. You have other things you could be doing. Right? Stop playing with me, Spy. 519.96. Telling y'all. This is it. This is it. This is why I'm passionate about this, because when I'm having conversations with people that are DMing me and they're saying that, you know, this happened and that happened, but then I say, well, what did you hear first that caused you to do this? What did you hear first that caused you to do that? What influenced your decision? Right? What's up, King?
Hey, first, I don't know if this is AI or what, but I don't know who turned my hand brown. I didn't do that. I don't know how that happened. Uh, could you do me a favor, Neil?
Sure.
Could you go up to the top of your screen and over to the right where it says 2023 tax return? Click on that for me and open it. just I'm just trying to see something real quick.
Only you, King.
Only me. I was all right. All right, guys. Back to the lesson, but everybody was so quiet. I figured we're wrapping up anyway.
I really appreciate you, man.
Spy's doing this old flip, which is fine by me. But yeah.
But as I said, guys, what happened? It hit that level, right? And again, I'm not guessing. I just simply set it and forget it, right? As soon as I get that alert, my antenna goes up. Wait a second, somebody's paying me. I need to go look at this.
Yep. Check them traps.
That's it. That's it. You set
Hey, so
those.
oh,
Go ahead, brother. Go ahead.
real quick. So just King, while you chime in, while he's like on SPY or something, what are you doing over with the VIX? I know it's possibly going up, but I mean, are you kind of like on a split screen watching VIX and SPY?
Absolutely. Yeah.
Okay.
I've got a bunch of split screens. I'm watching a bunch of stuff, but VIX is one of the main ones I'm watching. And it did give me an inkling that SPY was going to reject. I'm looking at the VIX catch support, and now the VIX is going bullish. But I'm going to talk about that tomorrow or next week. But I'm pretty sure tomorrow we'll have a chance to cover it.
Okay. So it kind of reinforced what he's saying too, if you're watching the VIX.
For sure, definitely. The VIX is going to measure the volatility in the S&P, so definitely.
Right on. Yeah, I know you like to kind of watch everything before you bust your move. So I was just trying to see how you work it with the spot. So
I heard that.
Watching everything, literally.
At another level. Now, ultimately, I want SPY to hit 516.46.
Yikes.
Now, in order for it to do so, it has to break that 50 EMA. So we're going to set that alert there. Then it's going to have to break the top of resistance, 518.25. Then it's going to have to bust through that area right here of the bottom of consolidation at 517.80. And then one other level will support SPY coming down. That's it. So I know for sure if it hits 517.80, it is coming to 516.46. Because looking at the past, what stopped it? So when it hit 516.46 on the upside, what stopped it? Right? Other than the consolidation at 517.80, that's it. So what's going to stop it coming down? Absolutely nothing.
Yeah, this is probably happening because we got trade rep Jameson Greer is testifying today before Senate, so it's probably got something to do with it. I can't really hear the news because I'm on here with you all, but
I have a question.
Sir,
So okay, if we looking at the volume and the heat map and all that, it doesn't really support that the price should be coming down because the heat map is like Boston Celtic green, everything green.
green on the day. We still green for the day. Change the heat map to the 1 hour.
remember, when you're looking at the daily, you're looking at the market overall for 24-hour period.
Yeah, overall we're green, but if you change it to the 1 hour, it's gonna be blood red.
You're right.
So that's showing us what's happening closer in. Like I say, we still green for the day, but as of right now, we pulling back and we pulling back hard.
Right? 517.80. If it breaks 517.80, you know what? Let's go as far as setting another level, which is now the top of support. If it breaks that top at 517.06, and spot stop playing. So now this is where patience comes. Right.
Yeah, it's gonna get ugly. Spot break 517.37. Gonna get real ugly.
What's up, guys? Can y'all hear me?
Hey, what's up, Mark?
Yeah, it's got to fill that. SPX has a huge gap to fill down. But I've been listening to the whole lesson. Really good stuff, man. I was surprised to see you mapping from the 5-minute time frame. I think that's really good. I mean, I think that the cool thing about that is that you get to zoom in so much more. And I mean, each of those 5-minute candles, they hold such a substantial value. What my question is, what influences you to start there versus coming outward back in? Is it just for precision purposes? Because I do like the fact that every single last one of the levels you called out hit right when you saw the reversal.
Yeah, that's it right there, precision. Right?
Gotcha.
yeah, Mark told me before you went to bed, you were feeling funny, so you went to
Right?
bed.
Because I understand that each candle is going to represent 5-minute increments, right?
Yeah.
I don't
Yeah, like I tell y'all, you know, at y'all age, even at my age,
every 15
when you
minutes.
don't feel, when something don't feel right, you
Uh,
can't really ignore it. But
What's your background, Mark? Okay.
So because I understand that I don't really want to wait to see price action every 15 minutes. I want to see it as soon as possible, but not too quick, because I want to be able to make that split-second decision as I'm watching the candle take place. And then it also gives me the opportunity, okay, so if I get curious enough, all right, what's happening in that 5-minute time frame candle, right? So now I'm gonna go lower to the 2-minute, right? What's going on in the 2-minute? Okay, I see volume is supporting that candle. Okay, let's go into the 45-second, right? Okay, which way is it going? Is it going south? Is it going north? Or is it just gonna keep bouncing sideways, right? I'm just gonna get lower and lower. I'll probably go as low as the 15-second. But what I do see on the 15-second is that it's starting to consolidate. So now what that tells me, right, in that 5-minute time frame, that S is just gonna start bouncing at some point. Right? Now with me being on the 5-minute, what I can also probably gather, because it didn't fall below that target I set here, it rejected it. So now, let's set another alert, 519.84. So now one or two things gonna happen. It's gonna go to 519.84 and reject, or it's gonna hit 519.84 and break it. Who's in control right now? Bears. Right? What did I say is happening on the 15-second? It's consolidated. So now what are we seeing? It's just simply bouncing. Right? So let's go back to the 15-second. Was it 15-second? So it was 45. Thought it was 15-second. But looking at the 15-second, either way, guess what? I just got that sell signal. Right? So now let's go and see what's happening with the 5. So now when I look at the 5, I should see the 5 coming down. But again, that's okay. Because as I said, what was going to happen? 519.84. So now it's fighting to get to 519.84. And let's see where we at. We got another 2 minutes, almost 1 minute before we see a new candle. Now, based on the direction of that new candle, that will determine how this may play out, on whether or not it is going to continue that upward momentum to 519.84, right? So we got 45 seconds. Now, keep in mind, what I'm really, so now I'm really starting to get surgical, right? Because now when I see I hit 11:04.55, now I'm really zooming in on the direction that candle, or the momentum of that candle. Because I know if the momentum of that candle is going towards resistance, it is going to be a bullish candle. If I see that closer to that 5-minute mark that the price has fallen, that next candle is going to be bearish. All right, so we have that pivotal mark. 3, 2, 1. There we go. All right. And how do I know that? Because at the end of the candle, the momentum was to the downside. And I tell y'all, when I pay I pay so much detail attention, if that's how that's worded, that sometimes it's scary. when it comes to these candles, because we talk about money here, right? You got to pay attention to what's happening. What's up, King? What's up, Black Hand?
I think the correct phrase is attention to detail. I think that's what you looking for.
Attention to detail. What did I say? I don't remember.
I don't know what you said, bro. Detail to attention or something like that.
But yeah, y'all, I'm telling y'all, if you can reach the level where I just broke it down and you're able to do this on your own, I want you to go hibernate for the next 6 months.
What?
Don't talk to nobody. Don't let anything distract you. Because I'm telling you, when you clearly understand everything I just explained to you, and you break it down to its finest point, it is going to click. And when it clicks, you are going to have to put yourself in an environment when you're looking at these charts that you have to be uninterrupted. Because I'm telling you, it is a game changer. And I'm telling you this because I've experienced it. What's up, Marcy?
Good morning. So my question is, when you went down to the 15-second, you said that you got a sell signal.
Right.
How do you see that?
Oh, so it's based off of this indicator here, which is the SARS, the parabolic SARS. Right? And there's different indicators that you can use. And this is why I'm not going to go in detail on the indicators that I use, because I don't want everybody to start using what I use and then you get lost. Right? There are indicators out there that will tell you whether to buy or sell. Okay? And you can just simply go to your indicator and just buy and sell.
There's the level on SPY. We break that, it's gonna get ugly.
Different, buy and sell, right?
Thank you so much.
You are most welcome. Absolutely. Come on home, baby. What's up, Sergina?
Hey, Neil. So are you prescribing that we abandon our family like you did for about 6 months so that we can get this together?
Absolutely. Absolutely. Because I'm telling you, your family is going to love you after that 6 months and 1 day.
So it's supposed to be 6 months and 1 day.
Well, I'm just saying, if you go in hibernation for 6 months, on that 6 month and 1 day, and you come out and you show everybody what you did, they're gonna be like, wow.
And we're supposed to only eat fruits and vegetables, right?
Absolutely.
Okay.
Eat fruit. Well, I'm not even gonna dig deep into that, because I'm gonna have having a whole nother conversations.
You don't have
Neglect
to
your family.
I remember King got on you about that.
But say that again?
I said I had to bother you because King got on you about that.
Yes, I am what they call a fruitarian, if that's even a thing.
Hey man, we only got a few minutes left. Let's get some questions in. Okay?
All right, yeah.
We
So
don't need to hear about your religious beliefs in the fruit.
All right, so
yes.
do we have any more questions or concerns about what I just went over? Because I really want you guys to, when you go back and look at this, right, I want you to slow it down and really, all right, I saw Neil do it at this level. Why did he do it at this level? And then answer that question. And then go to the next. All right, I see Neil do it at this level. Why did Neil do it at this level? And then once you start to unravel those answers, then it's going to click, then click, then click, and then it's all going to make sense. But I highly, highly suggest that, and this goes for all of the videos, because every single video that you look at is going to unlock something else for you, right? And the when you start from the beginning, the closer you get, excuse me, the closer you get to the end, it's all gonna make sense. You're really gonna sit back and be like, I'm so glad I did this. Right? So I'm going to all right, Alicia.
So the 5 minute is just for the day trades, right? Not for like swings.
Nah, definitely not
Okay.
for, because again, it's 5 minutes, right? When you're looking to swing, you want to look at the long term time frames, like the daily, the 3-day, the monthly, depending on how long out you're looking to play. Okay.
In the 4 hour, because I think I saw that earlier, the 4 hour one, like
Yeah.
last week.
You can
Is
look at
that, go ahead.
yeah, absolutely. You can look at the 4 hour too. Yeah, for sure. Remember, any time frame that's longer, that's what you want to look at for longer plays, right? Anything lower than, I would say, the 2 hour, the 1 hour, the 65-minute, I would use those time frames for day trades. Because remember, there's only what, 6.5 hours for in the trading session, if I remember that correctly, right? So if you're looking at the 4 hour at the top of the market, then you're still within that time frame to see real activity, right? If you're looking at the daily, trying to figure out what you're going to do today, it may not really give you the information you need in order to take gains today, right? So if you're day trading, you're looking to take gains today, not tomorrow. All right. All right, come on. Look at you, Spot. All right. So I'm going to stop sharing, and I want to know if you guys have any.
I think it's
Sir, any. And I also want to know how you felt about today's session. Like, come on, talk to me. Let's go. Let's see what you got. Because we cooked today.
You did an amazing job, Neil. It was crazy because when I did my NVIDIA play, I was marking it off the candles, but I was only on the 10-minute time frame. I didn't lower the time. I didn't go. I looked up at the 30 for a quick second, but I wasn't really marking it. And as you were doing, I was like, oh, if I was marking it this way, I would have been able to call them. Granted, I got out at 30%, exactly where I wanted to be because I marked all my levels, but it kind of helped me dissect it a little bit more when you explained it.
Love it. Love it. Anyone else?
Yeah, I really enjoyed the presentation as well, Neil. Because I really was not confused, but I really didn't understand. I mean, let me backtrack. As I saw y'all do the levels and mark the levels, I understood how to read it, like the support and resistance, but I never truly understood the full picture of like going back to get the certain level to see where the next levels want to come, like going, a little ways back to see where it dropped or where it went to the highest point. And also when you mark the levels on the wick instead of just the full body of the candle. So that was really very informative for me as well. I'm gonna do some charting today to practice to get my comfort. Thank you.
You're absolutely welcome, for sure. Understand the wick. So remember, the bottom of the wick is the lowest point of the candle. The top of the wick is the highest point of the candle, right? So that's why I marked those specific levels. The real body or the spread, now all you're seeing is the action, right?
Right.
Anyone else? Come on, Yasmin, Myra, good fellow.
I appreciate the lesson because I also am trying to get better at charting instead of just like looking. So it's helpful to see you do it and how you do it and how you look at the candles and how you look at the wick and like how you told us last week when you said even if you put like your alert on, sometimes what hits isn't the actual full body of the candle. So it's helpful to know that instead of thinking like, oh, it hit, but it didn't.
I am always looking at the wick to give me that, that true confirmation. And again, the real body or the spread can be used as well. But when you're looking at the real body, you're looking at the price action, right? Because what sets off the alert? It's the wick. It's normally not the real body unless it's one of those candles that is the Marabozo, right? We talked about that one in the past, which is the candle that has no interruption. So if it's a bull Marabozo, there's no interruption from the bears. And if it's a bear Marabozo, there's no interruption from the bulls, right? So that I'm almost 99% certain that will be the only real time you will see the real body or the spread be the reason why, if you set an alert, why that alert would go off.
Yeah, it helped in hearing that. So I knew what to look for, what would be going on when I get my alerts.
Cool. Good to hear that that there was some clarification there. Anyone else? You good, Jermaine? You good, Victor? I know you had a question for me, Victor. Did I answer it? I mean, I really didn't even know what the question was, but I asked you to save it for today.
So, Neil,
Yes, sir.
I have a question just to recap. So, okay, when we first come in and set our support and resistance, that's the first time is just for confirmation, correct? To see if we want to decide to do a put or a call.
Right.
And then you set the next level of support and resistance for your target, depending on the direction of the trend, right?
Right. So remember, I set the alerts first, right? And then now I want to hear what's happening in the streets. Once I hear what's happening in the streets, now I'm zooming back in, looking at the charts and looking at where that price is going and where that momentum is going, right? So now that my alerts now that my alerts are set, are they hitting them? All right. If it hits this level, I'm getting in here, and then I'm taking profit here. That's it.
Okay, gotcha.
All right. Anyone else before we tap out? All right, y'all. So next week, we are going to go over how to evaluate a company, right? And also next week, I want to see your charts. I want to see somebody's charts. I want to see what you're looking at and how you are setting yourself up to take these gains. Because we have been giving you guys the blueprint, right? Now it's time for you guys to show if you've been doing your homework or not, right? So, as always, it's a pleasure. Thank you. And I'm sure I can speak for King and Mark. We appreciate you guys for giving us the opportunity to help you take gains out of this market.
Don't speak for me, man.
Come on, King, I'm trying to do my outro.
All right. Some of y'all I appreciate, but it's a couple of y'all.
So remember, yesterday's market is not today's market. Oh, and I actually meant to speak about yesterday's market. And yesterday's market was a clear example. If you haven't learned anything about how volatile this market can be, especially if you keep your ears to the streets. Somebody said something about something yesterday which caused the market to run up almost 250 points or over 100 points. And because it was validated that that information was false, it caused the market to drop again. How crazy is that? So you mean to tell me I can tell you something is going to cause you to buy you something, and then if I tell you something about what you just bought, it's going to cause you to sell it? That's what's happening every single day in this market. And the only way you are going to be able to really digest and understand how to play this game is if you are paying attention, right? So yesterday's market is not today's market, and patience will either pay you or you're going to pay for it. All right. So with that said, again, thank you guys. And you guys continue to have an amazing Tuesday. And I will see you guys tomorrow alongside King for more mental gold. All right. Peace, y'all.
Thank you.
Thank you so much.
Thank you.
Good job.
More than welcome, for sure.